Hello and welcome to this very special conversation. Over the last few days, we've had corporate stalwarts like Uday Kotak, Goenka, and now economist and PMAC member Sanjeev Sanyal speak about the decline in interest among the younger generation of big business families in India in running and building out businesses. Uday Kotak said, and I quote, "I would love to see this generation be hungry for success and build operational businesses. Even today, I firmly believe that the next generation must work hard and create businesses rather than becoming financial investors too early in life." Goenka writes this morning, "Modern kinds believe in passive income, active vacations, and aggressive networking at yacht parties. Who needs the stress of managing employees and production lines when you can just manage a diversified stock portfolio and an impressive sneaker collection?" Sanjeev Sanyal tweeted today, it'll come up on your screen, "I'm glad that the business elite has woken up to the real danger that their heirs are becoming too soft. Instead of leveraging their wealth to take bigger risks, they create family offices." It's not the full quote, but the operative part of the quote. Is this a wake-up call for the next generation in business? How justified is some of this criticism? Is it a bit too harsh? Let's discuss this with two veteran investors. Devina, Mehra is with me here in our studios. Deepak, Shenoy is joining us from Bangalore. Thank you very much, Devina. Thank you very much, Deepak, for joining us on this very interesting topic. So let me just dive straight in, Devina. How justified is, the basic thrust of the message which Uday Kotak, Goenka, and of course Sanjeev Sanyal are backing?
Okay, there are two or three aspects to it. For the first, let me just read out a quote to you. "Our youth now love luxury. They have bad manners, contempt for authority, show disrespect for their elders, love chatter in place of exercise. They contradict their parents, gobble up their food, and tyrannize their teachers." Guess when this quote is from?
Sounds like my kids.
This is from 79 AD, graffiti on the walls of Pompeii. Oh. And the actual quote goes back even further to Greek plays. Right. So this is what every generation thinks of the next generation, that the next generation is going down the drain, not working hard enough, and so on. So that's one part. The other part, of course, is that businesses, especially manufacturing businesses in India, are difficult to run. I was talking to an older industrialist who sold out his business a few years ago, and now he was telling me that his son has opted to start a manufacturing business. And he said, I actually dissuaded him for a while, saying, do you know what it entails, And because there's so many regulatory authorities, from the municipality to getting water, electricity, labor laws, there's just so many rent seekers. And he says, because we've done it before, we could do it. But my son said, if we don't do it, who will do it? But that's the one hurdle. The other thing is, even if you look at the history of business families, normally beyond generation 3, it becomes difficult because the first person had the hunger, built it. The second generation also saw some part of that struggle. The third generation is normally born in luxury. So so maybe a new set of hungry entrepreneurs take the place of the old business families. That is also. But the fact is, it is difficult to do business, especially manufacturing business in India. No doubt about that.
But you began with a very fundamental basic point. Each generation feels that
yes,
the next generation is useless. It's not.
Yes, but human civilization has continued to progress. So obviously that's not the right viewpoint.
Absolutely. I think you make some very good points. Deepak, come in on this. Where do you stand?
Prashant, I completely agree. I think my thing is, my contention is with one point. Why do we need the children of rich people to set up the next set of industries? Isn't it so that the hunger that the normal person has to rise through the ranks or to build their own businesses is what's going to drive the next set of industries? So whether it is, look at a lot of industries that have been set up. A lot of them have set up by first generation entrepreneurs. Where are the next set of first generation entrepreneurs? I think the idea now is the science of the children, or the children of those who have become rich are now investing in those companies and calling them startup investing or whatever it is. and then also spending the money, which is both, I think, are great things, because if you don't have the hunger, at least you give the money to the person who has the hunger. And secondly, you spend so that it increases the incomes of all the people who provide you the services that or products that allow you to spend. So I think both things are useful. We are complaining, I think, mostly because we think that this is a misallocation of capital, but it's not a misallocation of capital. They are actually investing in other businesses. They are not going and buying gold and real estate. So I think in that context, this is not a bad thing. We should encourage new entrepreneurs to come, and whatever barriers there are for new entrepreneurs to come up, I think we should change that. It's like, I sweat in a factory so that my children need not. But just because, let's say, I become rich enough, if my children chose to sit in an AC office, they will just have to use that money to fund someone else who's going to sweat in another factory. So I think that that process should continue. And like Devina said, we will always think less of the next generation. There was a number of people who are currently, who are big businessmen, were thought of as people who may not be able to run their parents' companies when their parents passed away and so on. But turns out some of them were actually quite capable. So I think some of it may be unfounded as well, that they won't be able to do it at all.
But both of you agree, Deepak and Devina. Deepak, you go first, that this actually is happening. It may not, it's right or wrong is a different matter, but this essentially is the trend. I mean, it's clearly visible in the businesses that you speak with, both of you speak with so many businesses, long histories. Deepak, you agree, right? It is happening.
Yes, some of this is a natural consequence also, because you sell your business for a few thousand crores. Now, to start a new business also may not take that few thousand crores in the first place. And then the scale of starting something at a few thousand crores is different from starting something at a 50 or 60 crores. So you choose to instead say, okay, listen, I'll spend my time diversifying, investing in other people's businesses, which I understand very well. Very few people sit in there saying, listen, I'm going to go build the next big massive thing. And those people who have the vision, of course, they will go ahead. But a lot of people, and this is worldwide, not just India. I think it is in the US as well. It's in Europe as well. The next gen need not necessarily run the businesses that their parents set up. Sometimes they hire external managers. And that's why professional managers take over large businesses, even those with names. Larsen and Toubro were names. There were few people's names.
Yeah.
Goldman Sachs were people's names. So it's not that there's anybody from the Goldman family or the Sachs family running Goldman Sachs now. It's just that they've professionalized in that sense. So I think it's worldwide, it's happening, and it's the correct way to happen. Capital should be allocated to people who are hungry.
But it is also true that, some of the biggest business families back in the 90s, etc., we don't want to name them. They no longer really exist in that way. They were some of the richest families, right?
Yeah, that's what I'm saying.
25, 30 years ago.
That the generation, beyond a point, the wealth doesn't go beyond a certain number of generations, or at least the businesses don't go. And the original Sensex had, this is something I've written about repeatedly, you had the JK, the Mafatlals, the Thapars, the Scindias, and those were all old businesses. The original Sensex had only one young company, which was Indian Hotels. All others were decades old companies, and many of them became irrelevant, and some because of the family thing, others like they could not adapt to the changing times, like Premier Automobiles or Hindustan Motors, whereas the two-wheeler companies code and Maruti code, Maruti of course was already a new gen, but that's the whole point, that some businesses will go out, other businesses will come in, and normally the new entrepreneur has more hunger.
So as Deepak says, at least they're getting funding.
Yes, that's the good part, that now funding is far easier. When I set up my business, there was no cachet to setting up a business or being a startup or any money being available, any of that. that was a negative to give up a good job and start something.
How much of this is because of how well, because all three gentlemen have mentioned, financialization, people getting, Mr. Kotak talked about getting into financial markets too early, right? I think Harsh Goenka talks about that. Sanjeev Sanyal also refers to it. how much of it is a consequence of markets having had a very extraordinary run for the last 3-4 years? Because the rate of return in markets became so compelling that it was far higher than what the underlying businesses were earning. So it may actually be a more recent phenomenon in that sense.
That's part of it, but then it also means that the business that you are running gets a certain multiple. So that also, I mean, so it's not as if that it doesn't become lucrative, because if your business lists or is eventually going to list, you will get a multiple of what you're earning, and there also the robust financial market helps. I mean, right now, of course, you've had cases, and that's in one way good, that even loss-making companies can go public, and there's still a market for that. So that part I don't think is a negative, because that means capital is available, capital is mobile, especially in a country like India, which was always very capital starved. So any avenue of capital raising that came out, there was a rush at the door. And any company which had lots of cash just sat on it, because you knew that when you needed cash, you may not be able to raise it. That was the nature of the capital markets, has gotten a bit better from there. So that's all for the good. And as Deepak mentioned, yes, I mean, if you don't want to run a business, if you're investing in other businesses, that's also a good use of capital.
Deepak, coming on this point, I mean, essentially what we are seeing, this shift towards setting up family offices, being involved in markets, managing money in that sense, right? That's essentially markets, right? Over the last 3-4 years, returns have been far higher than what average returns have been for indices going back 25-30 years.
I think in general, if you look at the markets returning 12 to 13% over a very long period of time,
Yep.
And perhaps mid caps returning even more than that, this is roughly a reasonable ROE for even a manufacturing business to have. Although people target 15%, 20%, they end up with something like 11, 12% anyway. So if you're getting an ROE of 12% only on a manufacturing business that you set up, then having an ROE of about 12, 13% in the markets is roughly the same. You're not getting super normal ones. And I mean, to a certain extent, it's the Indian industrialist mentality of largely being trading level organizations, not doing a lot more of the research element in their manufacturing setups, that leads industrialists to kind of believe they'll stick at the 12, 13% ROEs. Whereas if you look at a lot of the knowledge economy sectors, ROEs are upwards of 25, 30%. So ask me today if I would set up a software business with the ROEs at 30, 35%, I think that's much better than investing that money in the markets. But ask the manufacturer who's mostly buying, say, parts from abroad and making machines where there's not too much IP, or making things that there's not too much IP in, then there's not that much ROE in that business, and then you can might as well stick it to this part of the business, as in the investing in other people's businesses instead. I think we have to change perhaps even the thought process around manufacturing, where you will get a little more in terms of IP research, something that is peculiar to you, that does much better. Build your own brands, for instance. I think that has a lot of return. And by the way, there's nothing wrong with that. There was a person who sold this fog deodorant, Mr. Patel, I forget his first name, but he built a phenomenal business, and I think long term it would have been a great ROE had he continued to run it. But he sold the entire business, got a lot of money. He has started another business on his own, but his next generation, if they were to get the money, I don't think they'd probably go down that route. They might go down the investing route. It is perfectly fine there. I think it's just about getting higher returns of capital. If you reduce stock market returns, will this money go back to manufacturing? I mean, I think it's a fundamental problem. People don't want to, rather than they see more return in markets. They don't want to go to shop floors. The same people don't. So they will still rather invest in other people who will find the shop floors and build the next set of businesses.
I would like to say that Indian IT are not really knowledge companies or R&D companies. In fact, that has been my bugbear with the Indian IT, that in spite of sitting on cash for 2 decades plus, they have not even spent 50 crores on R&D. They have not done anything. In fact, many of the manufacturing companies have done more R&D. You look at, I mean, just as an example, Bajaj Auto. I mean, it's reinvented itself so many times, and now including now with electric vehicles. whereas IT companies have not really at all. I mean, if you look at the per person productivity of IT companies here and what is IT companies in the US, let us say, it's a world apart, and that has been the case. You have not even tried to bridge that gap.
But I think, as both of you said, Devina and Deepak, financial investors, great, both in listed companies, unlisted companies, new businesses, we 100% need that. But we also need manufacturing, right? And that is 100% has to be done. And I think that is the point which people like Uday Kotak, Harsh Goenka, and Sanjeev Sanyal have also been sort of making. And that kind of goes back. It's chicken and egg, what Devina started with, that maybe we need to ease processes, and the ability to actually make and set up these businesses also needs to be focused on. That can only happen as far as regulation from the government side. And of course, they've been trying as well. Devina and Deepak, thank you very much, both of you, for joining us. It's a very interesting conversation, and it's a conversation we will continue having and discussing over the next many weeks. Thank you.